Hey guys, welcome back to my YouTube, and in this video I'm going to teach what ranges are and how to identify ranges and how to actually trade them, since I got a lot of requests for it. So let's begin. So in this video I'm going to go over the range model number second. If you haven't watched the range model number one, I'll give it the link to uh, I'll give the link to it in the description so you can check it out. In this model, we are basically looking for two deviations from a swing point, okay? And this is a range type that appears at least once or twice on the M1 chart on all markets. And it works on every market and it doesn't require any bias, all right? And it can be on any time frame. So yeah, it's like a very universal model. This is basically how it looks like. So we have our swing point from here to here. So this is our swing low and this is our swing high. We first get a deviation. Okay, so this is the high and this is the low. Now we are looking for a deviation above this high, and we are not really gonna predict that. We are not gonna predict if price is gonna make a deviation above here or not. We are not interested in that. But then price is gonna make another deviation, and that's where we are going to be interested in it. Okay, so the same low that created this high, if price actually comes lower and take this out and then make a market structure shift and then get like a reaction, that's our range. Okay, and we are going to target this range high. So this is our range high, this is our range low, this is our deviation high, and this is our deviation low. Now a lot of you ask me that why is this not going to be our range low, and why is this not going to be our range low? Well, it can be, but the thing is, you need the deviation to happen below the low. Okay, in case of longing, okay, if you want to long, you want this deviation to happen below the low that created this high. Now if let's say we have this kind of pattern and it forms after price takes out this low, then that's fine as well, because this high came from this low, right? So if it happens, you can still look for longs there as well. It's that simple. You don't, it doesn't have to make like a structure like this. So it's gonna make a high, then a higher low, and then a higher high again. It doesn't have to be that. If price takes out this low, this right here, this higher low, it doesn't have to be this one necessarily, and then it makes this kind of structure, you can still long it and target this range high here. So range high, range low, deviation low, and deviation high. Now while targeting, we have to make sure that our stops are always above or below the deviation high or low, and our targets must be at the range high or the range low, not the deviation high or the deviation low. Now let's get into a more simplified schematic of it. So you can read this out yourself, but this is our range high, this is our range low. We got our first deviation here, then we got our second deviation here. Here's our market structure shift. Now for entry, you can use two things. You can either enter from the auto block and you can enter from the range low. Now one thing to make sure of that is the market structure shift. The market structure shift must be your market structure shift high or low. It must be the high that forms the deviation low. Okay, this is necessary and this is important. So you can't just randomly pick any high or low for market structure shift. It must be the high that creates the low. All right, and then for the market structure shift and a confirm market structure shift, you need a close above this high. Okay, this high, there must be a close above it, and this low, there must be a close below it, right? Then for entry, you can enter from this auto block that is going to be formed here, or you can enter from this range low here, and your stops is always going to be below the deviation low or above the deviation high, and your targets are always going to be the range highs and the range lows, and not the deviation highs and the deviation lows. So yeah, this is pretty much it. This is literally how simple it is. Now I'm going to go over some examples. Some of the examples are going to be from hindsight, some are going to be the ones that I've actually traded. So yeah, let's begin. So here's my Discord, and it's free. If you want to join, you can just join it from the link in the description. uh Here's the trade that I took, and now let me just explain it. Here is a high, and here is a low. Okay, now I've shared the M1 chart here, but this trade was based on the M5. So yeah, this is the range high, this is the range low. Price made a deviation. Now if price was right here, that I wouldn't be looking for any longs or something, because I wouldn't know if price is going to deviate below this low or not. But when price deviated below this low, okay, and then made a market structure shift and closed above it, it does it right here. It closes above the market structure shift on the M5. You're gonna see it. Okay, this is just today's price action on BTC. And then I pick an auto block for entry, and look at it, it's a zero drawdown trade. Now I could have targeted this high here, I mean the range high, but I had to go somewhere, so I closed the trade earlier. And if you go to Bitcoin chart, you'll see that price already smashed this TP pretty easy. So yeah, deviation number one and low, deviation number two, and after the market structure shift, this is our confirmation that price is gonna go back to the range high. So yeah, this is the first example. Here's another example I traded. This is the range high and this is the range low. Okay, and why are these the range highs and range lows, and why not some other lows are highs? The answer is simple: deviation number one, deviation number two, and after the deviation we see a close above this M15 high, right? And this is the same high that created this low. Okay, so that is enough confirmation. And I enter here and I target the range highs, and here are my executions. As you can see, I will actually suggest to everyone to join my Discord, because I post a lot of free stuff in my Discord. I have this channel dedicated for some good stuff. Okay, so you can just check it out. I post around some valuable educational stuff, so you can check it. Sometimes I do post my trades as well. Let me just find it out for you. Okay, and I'm not just talking in hindsight. Here's me sharing the trade beforehand. Okay, um, I tell the guy that I'm already in BTC longs. Okay, and yeah, here it is. So if you want to join, do join. I really recommend it. Now let's get back to more examples. So here's my Twitter, and if you haven't followed me there, you want to make sure you follow there as well, because I drop a lot of alpha there as well. Well, we have a high, we have a low, and then there's deviation number one, and then deviation number two, and then this is the high, or you can use this as well. These are the highs that created this low here. So we have a close above it. Okay, what I do is that I place my limit at a place where I get at least 2R. Okay, so I placed it here because if I were to enter from this auto block, I won't get 2R. So for me to enter in a trade, I must get at least 2R. So yeah, I placed it here and I got 2R from this trade. Here's another example, and this is like a very low time frame range, to be honest. I'm showing the M1 because I don't have access to the second chart. So we have a high and low, then deviation number one, deviation number two, a market structure shift, an entry, and then here's the exit. But yeah, if you go to the 15-second chart, this is gonna look like a very clear range deviation model. Okay, the schematic that I showed you. Well, it's the same here. And here is another example. Okay, this is hindsight, by the way. The other ones were actually real. Uh, Here is range high, here's range low, deviation number one, deviation number two, market structure shift, and then entry from somewhere where I can at least get 2R, and yes, it's done. It takes out the TP. Also, I want to make something clear that it's not 100% winner strategy, so you don't want to expect too much from it. It's just a standard 70%, 75% winner strategy, but it's simple. It doesn't require any bias, and it's super mechanical. So yeah, it's very easy to understand. Here's another one: range low, range high, deviation number one, deviation number two, market structure shift, and a close below, entry at somewhere where I could at least get 2R. I think it's from the auto block, sorry. And yeah, stop loss at the range high and then targeting the range low. Here's another example. So deviation number one, deviation number two, and then a market structure shift with a close below it, and then stop loss at this high, the deviation high, and targeting the range lows. this was spotted by my friend in the server, so yeah, I included it in the video. Yeah, and I already showed this one. So yeah, this is pretty much it. Oh, there's one more example, so let me just explain that as well. Range high, range low, deviation number one, and the deviation number two. Market structure shift with a close below, entry at somewhere where I could at least get 2R, right? Then again, range high, range low, deviation number one, deviation number two. Then market structure shift, and then entry from this auto block right here, and targeting the range high. So yeah, that is pretty much it. And I would really suggest you guys to join my Discord server. It's literally free. Link will be in the description, and you can give me suggestions here. And I'm actually making this video because of the people in my Discord, because they were asking me again and again. So yeah, if you wanna have a say in my content and my upcoming content, you wanna make sure to join this. Goodbye and have a good one.